Hello, everyone. Welcome to this webinar from ESS Biztools for our members, delivering a quarterly reporting and meeting service. I hope that wherever you are around Australia, that you're having a great day and are starting to get back into the workflow as we approach the end of July. I want to present this a little bit different today. Pardon me. On the 20th of April, there was a letter published in Accountants Daily addressed to the accounting profession, and I thought I'd share this with you. It should not have been up to me to write this letter, the writer indicated. The truth is that I have been patiently waiting for you to escape the compliance cubicle, but I cannot hang around much longer. Business is getting more competitive by the day, and I need your help. Over the years, I've sat through meetings after meeting about my tax returns. To be honest, this was under sufferance. Tax does not light me up. I get much more out of our annual tax planning meetings because there is tax to be saved and payments to be scheduled. But compliance matters leave me pretty flat. There is so much I could learn from you about business, but it's like you have a filter on your lens. I would rather work with all that you have to offer. It's time to spell it out. Help me run a better business. This was the plea from this client to the accounting profession. Because I'm busy at the coalface, it is easy to miss what your experienced eye can see. I don't need you to have all the answers, but just show an interest in what I'm doing. I'm lonely too. I can't confide in my employees about how the business is going, or my friends for that matter, nor do I necessarily want to burden my spouse with business issues. You already know my business and my backstory. What's more, I respect your professionalism. And I love that you're in business also, so you obviously know some of the problems. Why don't you meet with me quarterly at appointments set 12 months in advance? Note, 12 months in advance. Know that I look forward to these meetings and be interested in what you have to say. Use a standard agenda and scope to add various other items as they come up. Hold me to account that what I undertook to do at the last encounter, I will do. And I think by implication, the client will be holding the accountant to account also. Tailor my accounting reports to tell me where my money went. Give me meaningful comparisons between budgets and previous periods. It'd be great if you could give me some benchmark data. I can learn a lot from this. Don't give me 20 graphs when 2 will do. And please just don't go straight into expenses. I want to know more about my revenue and gross margins. Where can it be improved? Help me to uncover the underlying issues that will determine my future. Prompt my interest with your questions about average sales and conversion rates. I need to talk to someone about this. You know so much about keeping accurate records. Help me to set up a system to capture this data and provide a dashboard on how these revenue indicators are tracking. Captivate me with advice about making my business more saleable. My comment, a very important part of the role that accountants have to provide. Also help me with means to maximise my superannuation contributions, and also take into account my retirement aspirations and broaden my horizons suggest systems to run my business better. Explain why I should classify my customers, A, B, C types of customers. Give me some answers about employee incentive plans. Did I mention budgets? Take me through an annual budgeting process so that I understand it and can use it in my business. Talk to me on an ongoing basis about the importance of controlling working capital and guiding me to make sure I'm not overinvested. This client said, "No, what you do is incredibly valuable. So tell me what your service packages are and which one you'd recommend for me. You know my business. You know the services you can provide," I think is what he was really implying. "So tell me. Then I'll pay you in monthly installments. I'm awaiting your call." How would you have responded if you received that letter from your client? It was published in Accountants Daily. And I noticed at the time, the only comments that were recorded for 10 days thereafter were from 5 persons who were all consultants, including me. I never saw any accountancy firm or an accountant make any sort of response. But I think this letter clearly identifies some of the very important issues that are out there in the marketplace at present for accountants to consider. The marketplace is asking for changes, and accountants need to respond. My suggestion is that you do offer a periodic meeting, and that could be quarterly, or for many of your clients, you might find it's more valuable to be held monthly. But it's a great way to ensure that a range of business matters will be considered. Business matters that if you're only providing a traditional annual accounts and income tax return service to your clients, will not get attended to. And that's one of the reasons where small and medium-sized enterprises are complaining about accountants. There's been some commentary in the last 3 weeks about clients apparently being upset with accountancy fees. And this culminated in an article being written, "Is $5,000 reasonable to pay an accountant annually?" by Amanda Gascoigne, and a very experienced accountant who now offers an accounting mentoring service. Amanda argues in her response to this question, "Is $5,000 reasonable?" that it is, as long as accountants are providing a broader range of professional services to assist in adding value to clients. And I think that's what a regular quarterly meeting or monthly meeting will help you deliver to your clients. Your client will be able to talk on a CEO to a CFO basis at least 5 times per annum, 4 times in the quarterly meetings and once in the review of the financial performance and the tax return for the year. These meetings will be very valuable to your clients, especially if they're trying to scale up their business. Now, they might be trying to scale it up in the formal sense of doubling turnover over a few years, but they just want to keep on growing their business. They will have challenges financially, operationally. Gives you the real opportunity to offer CFO services to your clients. It's going to require you to identify the key items and confirm meeting dates and venue. We all get frustrated when clients change meeting dates and times, but they also get very frustrated when their accountant changes the dates and times of meetings. This gives an opportunity for these to be locked in to a calendar for 12 months. I think the standard agenda is a good idea, but make provision to expand it at times when particular items come up. And it's going to be very important to clearly identify who's going to do what. And my suggestion is that you, as the accountant, would be the minute keeper of these meetings and the preparer of the action plans. Therefore, you're responsible to be clearly identifying who is going to do what, and then follow them up about a week prior to the meeting to make sure that report has been prepared and will be available for discussion at the meeting. So the timetable needs to be prepared and people understand what they are having to do. Make sure minutes are prepared at the end of each of these quarterly meetings and sent to all participants, together with the action plan, individualized if possible, so that people who have got a responsibility to report back to the next meeting, or earlier if it's a very important matter, have clearly got notification that there's an expectation that they are going to do that. Nothing worse than turning up in 3 months' time and having someone say, I didn't know I had to prepare that report. Don't give them that opportunity to make that excuse, whether it's your team or the client's team. Let's have a look at some of the matters that you might discuss at a quarterly meeting. Because I've had accountants ring me and say, well, what would we do at a quarterly meeting? Please, we've got to get beyond this time trap of only thinking about taxation. Taxation doesn't add any value to your client's business. And I'm sure you don't need me to tell you, it's pretty tough out there for most of our clients at present throughout Australia. Cities, provincial cities, and country areas. It's tough. So let's try to add value to their businesses. And each of the items that I'm going to refer to now is contained within ESS Biztools. You have the tools at your disposal to be able to produce this type of service for your clients. An analysis of financial accounts, whether they're being prepared monthly or quarterly, key performance indicators, comparison to budgets, cash flow position. Where did the money go? In my experience over the years, that's been one of the most interesting questions that clients ask. You told me I've made $200,000 profit for the quarter or the year, doesn't matter what. It's not in the bank account. Where is it? Give them a simple, easy to follow source and application of funds so that they can understand where the money's going. Benchmark comparisons are very important. You can subscribe to one of the benchmarking services. Within ESS Biztools, we have a business health check reports for 5 different industries that you might care to utilize. Analyze the revenue, update the budgets. I think it's a good idea to supply clients with an updated break-even calculation for each of their operating business units so that the owner, the CEO, know that figure, but also the person who's responsible for that operation knows it. Let's look at customers. And this is now getting beyond what could be anything to do with preparing an annual set of accounts or a tax return. Making sure that the reporting on customers is flowing through. Who's the new customers? How many have been lost? What percentage of customers were sales made to in the last quarter? What was the average sale? How did it compare to previous? If possible, is it able to break it down into various departments? What's the gross profit? Again, broken down into products or departments, and the gross profit percentage. Very important to look at prospects. If you were the CFO in your clients' companies, and I was a CFO in a listed public company for quite some time, analysing prospects is very important, analysing the market. So what prospects have you got in you, as your client got in their customer relation management system? What communications were sent? What response was received? How many sales were made? What was the conversion percentage? How does all these figures compare to the previous quarter and to the budget? What's been the effectiveness of communication, newsletters, videos, webinars, direct mail, social media? What social media is this particular client using? Facebook, LinkedIn, Twitter. What were the results? Is the client producing podcasts? Or should they be? What advice would you give them? Let's now have a look at cash flow analysis. What is the actual bank balance as compared to the budget, the forecast position? And what's the reasons for the variation? What's upcoming that might affect all this? Debtors. I think it's very important that at each of these quarterly meetings, an analysis on the debtors position is presented. What's the balance outstanding? What's the debtors age analysis figures look like? What's debtors days outstanding? How much money had to be written off in the previous quarter? And what's management doing about problem debtors? What's the total amount? How many people are involved? Is there something wrong in the client's systems that have caused the bad debt write-offs and the problem debtors to emerge? What's happening in the business to cause these things? What about inventory? What's the investment? How's it allocated over the business? What's the stock turn rate? How does that compare to the budget expectations? Work in progress. How much is invested? What's the aging of work in progress? Is there some reason the jobs are still in work in progress beyond their estimated completion date? Does that mean that the job's got some problems on it? Maybe there's a hidden loss in that job that management have been reluctant to finalise because that's when it will be really broadcast that there's been a significant loss. Is someone trying to cushion the blow by waiting for another more profitable job to be completed? How much money is owing in creditors? It's all part of the working capital formula. How much is owing? What's the creditors' days outstanding? And very importantly, which creditors is your client not paying in accordance with the terms that have been negotiated? Because this is the sort of information that should be getting clearly discussed with the client so they understand the position. What about the client's team? How many new people have been engaged? How many resignations, retrenchments, or dismissals? Were exit interviews conducted with these people? What was the feedback? Is there something wrong because your client has got a team of 15 people and 6 have resigned in the last quarter? What's the sales per individual team member on a per head basis, and how does this compare to the same quarter last year? This is the type of information that you can be showing your client, having a conversation about, answering their questions. Cost control. I was always surprised about 5 or 6 years ago when CCH produced a report that was based on interviews of 1,300 small businesses and a few hundred accountants. And the small businesses identified the biggest single problem that they had at that stage, and I doubt that it's changed, was cost control. Yet I've never noticed any accountant talk about their need to prioritize cost control and management of costs for their clients. Do you do that? Is this an issue? Within ESS Biztools, we have a couple of papers written on cost control, and we've got some individual papers on various components of costs that you might care to have a look at and see if you can have that discussion with your clients. Why not conduct your own survey with your business clients and see what is worrying them? Because in that CCH survey, that was the major item. Now, I must admit, I'd never given it that sort of priority prior to receiving that report. What about business financing? It's pretty tough out there dealing with banks at present. Some of them have literally shut up shop, it would appear, as far as lending to business. So what's happening with your clients' business? Are they happy with their bank support, leasing, debtors financing? What are the options? But what about capital raising? Is it an issue that should be brought up? Do they want to try and raise some capital under Section 708? They can do it. Raise a maximum of $2 million from 20 investors in a 12-month period. Someone rang me recently and suggested that Section 708 was no longer applicable because we now had crowdsourced funding equity raising. And I said, no, that's not right. A retail investor has really got no limit on what they can invest within Section 708. So individual investor could be investing $50,000, $100,000 as part of a pool. Or in fact, they can invest substantially higher if they wished. So Section 708 has still got some very significant importance in the scheme of things. In fact, if you take a client to a crowdsourced funding intermediary to look at raising capital as crowdsourced funding equity raising company, the intermediary will be suggesting that some initial capital is raised utilising Section 708 because they want to have some fans, some close supporters, some people that know the company involved very early in the piece to encourage the other retail investors to follow suit. Early stage innovation company, obviously that only applies if you have a client that you're talking to who has developed a new product, process or service and is under 3 years of age. Crowdsourced funding equity raising. I've just mentioned it. Obviously it's available. Company can raise up to $5 million in a 12-month period. And has to issue shares in the company. Perhaps the company's considering an IPO. Andrew Geddes, former chair of Green Cross Limited for 11 years. Green Cross was a top 200 ASX company and a consultant to the accounting industry for over 30 years, has predicted that the number of IPOs in Australia will now reduce because some companies will be able to utilise crowdsourced funding equity raising instead. And perhaps later on, they might be prepared to have a look at an IPO. IPOs cost a lot of money, up around $1 million. And then there's the ongoing costs involved in abiding by the continual disclosure rules that the stock exchange demands of any company listed on it. And in the overall funding of a business, don't forget grants. They're there and people can benefit by utilising them. Risk management issues, insurance reviews might be considered at your quarterly meeting. Most definitely the personal property securities register system, I think, should be reviewed and considered to make sure that your client's not getting into a very awkward situation by not registering some of the businesses that are holding assets that are owned by your client's company or business. and they're not registering customers. And what other potential areas of risk are there that might affect this client? Within ESS Biztools, there are papers on risk management. I would suggest that you read those and try to identify the main risk areas that affect each of your business clients, and then talk to them about those risks. What about the pricing of products and services? I think it's appropriate on a quarterly basis to be doing some updates and reviews on the current labour costs, the team costs on an individual basis, the individual productivities as there have been some changes. The direct material purchases if your client's operating a tradie type business, the materials markup, the overhead costs, have they been reviewed? What is the targeted profitability? And when you put that back through the calculations, is the charge out rates that are being charged currently, how do they measure up with these reviewed ones to determine whether the business is going to earn the targeted profitability for the year? Now, you have these forms within ESS Biztools covering trades, manufacturing, professional services, and retail. That covers a lot of your clientele, I would suggest. So why not review them and then have them, the results of those reviews, targeted at each quarterly meeting? Research and development and innovation, is there projects underway? Yes, you can still claim research and development. Someone rang me about that recently also. You can still claim it, but the tax office is getting a lot tougher to deal with. The government does have an inquiry underway to try to improve the system, but we haven't seen the results of that yet. And are reports on current research and development projects being submitted to senior management, to the CEO or owner of the business, at least monthly? Because that's really one of the implied obligations of the government's research and development system. Corporate governance, board of directors meetings, are reports being submitted? Is there agenda items? This meeting that we're talking about may even be a de facto board of directors meeting, but are the minutes being prepared, action plans being prepared? And one of the big items that I wanted to leave you with today is, what about the what if items? Are they being discussed at these quarterly meetings? Or could they be discussed? Or could you be offering your client to supply those services throughout the year, not just when you're sitting down to have a formal meeting? I mentioned earlier I was the CFO and company secretary of a listed public company some years ago. And I reckon on average I spent 2 to 3 hours a day answering what if type questions from the CEO, the deputy CEO, and other senior managers within the management team. Could we do this? Could we do that? If we changed this product to meet that market, what would happen? We were a public company. We had about a dozen key people in senior management and then had plants operating throughout Eastern Australia. Yet those questions were coming every day. What does your client do when they wake up at 3 a.m. with a question that's driving them mad? A what if question? Do they ring you? I'm not necessarily meaning that you encourage your clients to ring you at 3 a.m. It's bad enough when that happens in a public company with the CEO ringing you. But all seriousness, this is a service that I think you should be thinking about providing to your client. A what if? Sure, you're going to have to work out the sums for what it might cost and bill them accordingly. Answer their questions. Act as if you were the CFO of their company. because I do not accept that small businesses and medium-sized enterprise operators do not have those questions. Of course they do. And they haven't got the benefit of having a team of in-house experts in sales, marketing, production, accounting, costing, computers, law in some cases, working in their offices that a public company has. Yet there was still a significant number of what-if questions every day from senior management. So should your firm be offering these services? Currently, there's some accountants complaining around Australia about fee resistance being shown by clients. I think it's understandable that there's fee resistance in tough economic times if accountants are not providing a diversified range of services. I hope you are, and I hope that this discussion is perhaps going to encourage you to be talking to your clients about running quarterly meetings with the client if you're not already doing so. Most clients do not consider annual accounts and taxation service advice as being value-added services. Let's go back to the letter that appeared within Accountants Daily. Over the years, I've sat through meeting after meeting with you about my tax returns. To be honest, I do this under sufferance. Tax doesn't light me up. How many of your clients would utter those or similar words? I hope that you're taking note of them and are offering them a wider range of services. I think the key to earning additional fees per client is by adding value-added services in addition to compliance work. I'm not suggesting you don't do the compliance work, but there's more work that could be offered to your business clients. Offering a periodic reporting and meeting service, monthly or quarterly, is a great introduction to ultimately being able to offer a full virtual CFO service to your business clients. ESS Biztools provides product packages, articles, templates and forms to assist you to deliver these types of service. And all of that material is included in the product packages that are currently within ESS Biztools. We are going to develop a separate product package relating to quarterly or monthly meetings with clients that will incorporate a lot of the material we've discussed today, but that is already all within the system. You can be using that now. If you would like to have discussions with us relative to how you might go about offering these services to your clients, or the mentoring services that we can provide to you over and above the 1 hour complimentary mentoring system or service on how to utilize the systems within ESS Biztools, please don't hesitate to contact us. We'll be happy to give you a proposal on how to do that. I should have asked you before, but if you have any questions, could you please type them in? I omitted to ask for questions earlier, so if you do think of anything, could you please send me a question once you finish watching this webinar, peter@essbiztools.com.au. Thank you for your support of ESS Biztools and ESS BizGrants. Have a great day. Goodbye.